Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Richtech Robotics, and let me tell you, it's a bit of a robot roller coaster. We'll see if this company's got the right programming for success, or if it's just stuck in a loop of its own making. Richtech Robotics is all about automating the service industry. Think robots in restaurants, hotels, and hospitals tackling those labor shortages. They design, make, and sell these robots aiming to become a super operator using their AI cloud platform to manage fleets of robots doing everything from delivering meals to scrubbing floors. A big move for Richtech is their planned entry into the restaurant business. They've got a deal brewing with Ghost Kitchens America to run one kitchen restaurants inside Walmart stores across Arizona, Colorado, and Texas. The idea is to optimize operations using their robots and AI. So next time you're grabbing groceries, a Richtech robot might be cooking your lunch. To fund these ambitions, Richtech completed a public offering, selling shares, warrants, and pre-funded warrants. They raised about $19.4 million after placement agent fees, planning to use it for working capital and buying robotic hardware. A chunk of that went to Rodman and Renshaw, their placement agent, for a cash fee and warrants. Keep in mind that the company also paid additional expenses for the placement agent. As of January, Richtech had around 40 million Class A shares and 71 million Class B shares outstanding. This is a detail to pay attention to. Now, let's get to the amendment. This report is actually an update to their original annual report to correct a few things, like the number of outstanding shares, some descriptions about their sales model, and update their management conclusion. Let's look at what this document will address. These include business overviews, risk factors, financial conditions, controls and procedures, executive compensation, and exhibits. Richtech was originally founded as Richtech Creative Displays LLC in Nevada in July 2016, and they converted to Richtech Robotics Inc., a Nevada corporation, in June 2022. It became a public company in November 2023. This is helpful to know for future company announcements. Richtech's robots fall into three main categories: indoor transport and delivery, sanitation, and food and beverage automation. They're targeting the hospitality sector. Matrity robots are server assistants designed for restaurants. They can bus tables, deliver food, and even entertain guests. Imagine a robot carrying plates from the kitchen to the table and then taking the dirty dishes back, reducing the waiter's workload. Medbot is built for hospitals, delivering medications and supplies. 5 of these robots can make around 8,000 deliveries a month, traveling over 600 miles. Skylark robots are made for hotels, handling room service, package delivery, and even cleaning floors. It's a modular system, meaning you can swap attachments depending on the task. For sanitation, there's the Dusty line of cleaning robots. The MX model is a floor scrubber for large spaces like warehouses and factories, capable of cleaning up to 500,000 square feet. Atom is their food and beverage automation robot, making coffee, cocktails, and tea. They even lease Atom out for corporate events. According to a McKinsey Global Institute report, it was estimated that about 40% of physical work done by people will be automated in less than 20 years. Richtech's future growth plan includes the expansion of their customer base, growth of operational robotic restaurants and partnership with Ghost Kitchens, strategic partnerships and new initiatives, and global expansion across key markets. Richtech believes it has a competitive edge due to its first-mover advantage, deployment experience and market knowledge, reliable technology, broad product offerings and synergies, distribution, enterprise partnerships, business model, and market coverage. These are all the components to their growth strategy. In 2025, Richtech plans to pivot to a robot as a service (RaaS) business model. RaaS helps create a predictable, recurring revenue stream and helps sustain a sustainable and profitable partnership. Over a 5-year period, RaaS delivers at minimum a 34% boost in customer lifetime value. Richtech faces competition from companies like Bear Robotics, Pudu Technology, Saveok, Miso Robotics, and Avidbots. The company is organized in a functional structure with sales, marketing, tech support, customer service, product development, creative design, manufacturing, procurement, accounting, and administration departments. The company has 9 pending patents and 3 approved patents. Additionally, they hold 2 registered trademarks and have 4 trademarks pending approval and own and operate 3 domain names. They are hoping their patents for their tray stabilizer system, service robot, and cleaning robot will be approved. Richtech is insured for commercial general liability, automobile liability, umbrella liability, workers' compensation, property, and directors and officers. This protects them from significant liability that could occur. Part of Richtech's long-term strategy includes securing MSAs, master service agreements, with larger corporations so that they can roll out our products and services across numerous locations. During fiscal year 2024, they executed a strategic transition to RAW-S agreements, which resulted in a material decrease in recognized revenue. On October 16, Richtech entered a binding letter of intent with Ghost Kitchens to have exclusive rights to operate 20 restaurants. The company has a dedicated internal IT department with cybersecurity engineers who oversee various aspects of cybersecurity. The sales strategies aim to scale revenue as quickly as possible without relying on high expenditure of capital or human resources. The company has deployed close to 300 robots and focuses on 4 main sources for clients: online marketing, outbound sales activity, conventions and networking, and referrals and word of mouth. The company leases out office facilities and their current term expires August 31, 2027. Now let's look at the less rosy side. As with any venture, especially in tech, there are risks involved. One risk is that the market for service robotics may develop more slowly than they expect. If businesses aren't so quick to adopt robots, their growth could be hampered. Also, with this market being new, it is subject to rapid technological change. Richtech will need to continue to raise capital to continue growing the business. This can lead to the company selling shares of stock, thereby diluting current stockholders. Because Richtech has limited experience in operating their robots in a variety of environments, unforeseen safety issues could result in injuries to people, which could result in adverse effects on business and reputation. There are large customers that are actively engaging with competitors to determine which products they like better. If the company is unable to sell their products to customers, the prospects and results of operations will be adversely affected. They will need to successfully manage product introductions and transitions in order to remain competitive. Expanding internationally is a task that requires the company to manage legal requirements, potential political or economic change, and working capital constraints. The company continues to implement initiatives designed to grow their business. These initiatives may prove costlier than they currently anticipate, and they may not succeed in increasing their revenue in an amount sufficient to offset the costs of these initiatives and to achieve and maintain profitability. Richtech depends on its reputation. Any harm to the brand or failure to enhance brand recognition may materially and adversely affect the business, financial condition, and results of operations. Richtech relies on third-party manufacturers' suppliers and expects to continue to do so for the foreseeable future, and any failure to comply with regulatory requirements and maintain quality assurance of manufacturers will affect profitability. The company's products incorporate certain components from sole source suppliers, and if their contract manufacturers are unable to source these components on a timely basis, their business will be affected. The components used in the robot sensors may fail as a result of manufacturing, design, or other defects over which they have no control and render their devices permanently inoperable. The company's robots are highly technical and could be vulnerable to hardware errors or software bugs, which may harm its reputation and their business. They also may incur significant direct or indirect liabilities in connection with their product warranties, which could adversely affect their business and operating results. Success depends on recruiting and retaining key personnel, and if the company fails to do so, it may be more difficult for them to execute their business strategy. The economy is currently experiencing a labor shortage, and they will need to hire additional qualified personnel to effectively implement the strategic plan. Their insurance coverage strategy may not be adequate to protect them from all business risks. Richtech must protect their intellectual property, but there's always a risk of competitors infringing on their patents or trade secrets. A big challenge is keeping up with regulations. New rules relating to the design, manufacturing, marketing could force them to change their products, adding to their costs. Richtech may become involved in legal and regulatory proceedings and commercial or contractual disputes, which could have an adverse effect on our profitability and financial position. The company is subject to U.S. and foreign anti-corruption and anti-money laundering laws and regulations. The company is subject to governmental export controls and sanctions laws and regulations. Complying with privacy and data protection laws is a must, and failing to do so can lead to significant penalties. Since this is a relatively new public company, the people managing it have limited experience in operating a public company. This means it could lead to not being able to implement controls. The market price and trading volume of the company stock may continue to be highly volatile, which could lead to a loss of all or part of a stockholder's investment. The dual-class structure of the company common stock has the effect of concentrating voting power, which may limit your ability to influence the outcome of important transactions, including a change in control. The company directors, executive officers, and principal stockholders have substantial control over the company and could delay or prevent a change of corporate control. Richtech has never paid dividends on their stock and may not pay any in the foreseeable future. Zhengqiang Huang is the CFO and another director. He also has been with the company since 2016 and oversees accounting, reporting, and procurement. Phil Zhang is their Chief Operating Officer, managing business development, marketing, and more. Matthew Casella joined as president in August, bringing a background in finance, hospitality, and technology. John Shigley is an independent director, bringing 30 years of experience from the casino hotel industry. Stephen Markshade is another independent director with a long history in finance and serving on public boards. Saul Factor is also an independent director with over 20 years in healthcare and pharmaceuticals. However, on December 13, 2024, the company received a notice of breach from AC Sunshine Securities LLC, ACSS, pursuant to which ACSS alleges that the company breached an exclusivity provision in that certain follow-on offering engagement letter. There are a lot of risks to the company and the industry, such as an evolving business model, global economy, and potential legal proceedings. The company's global operations are based mainly in the USA, except for some R&D work, which is based in China. Now let's look at some of the financials in particular with a focus in the healthcare sector. As of September 30, 2024, Richtech Robotics had a net cash of about $14.6 million. However, they had a net loss of about $8.1 million. A major point to note is that there was a large decrease of product revenue. There are significant amounts of securities authorized for issuance under equity compensation plans for employees and directors. This means that the company will be able to incentivize their key staff by awarding them ownership of company stock. Overall, Richtech Robotics is an ambitious company trying to break into a new market. They've got a vision for robots helping out everywhere, and they're trying to get there with the RAS model. They have a huge opportunity to solve major labor issues, but there are some risks of being a relatively new public company. So is Richtech worth investing in? Well, it's complicated. There are a lot of moving pieces here. Their strategy is solid as they find a recurring revenue stream, but their financials do need some work and are not too promising. This one's definitely a proceed with caution situation. Thanks for watching, and make sure to like, subscribe, and hit that notification bell so you're notified about our new videos.